Hello traders, Nick Shaheen here looking at Workhorse, not UPS. If you're long UPS, you should pay attention. It's in danger. Similar concept to what's going on here. So I've covered Workhorse before. I can't remember what I said last. I don't have time to go back and review it. I'm pretty consistent how I comment. I'm not going to go down the fact whether it's real, not, prospects, improvements, milestones. All of that's on you. Let's just talk chart and what the machines are doing with this, because yes, sentiment does matter. Yes, people do matter, but not as much as machines. So we should pay attention to how machines look at things. And I'm going to try to concentrate on the fact that they are daily candles. So these are the last 2 days. Okay, so the market has been selling off for 2 days. Meanwhile, that's what the news tells you. Meanwhile, the S&P is still 0.6% off of the all-time high. So sentiment is bruised when in reality the bulls are still in charge, and we should be talking about, hey, is this a breakout or not? Not is this a correction or not? So, but sentiment is bruised, which puts this stock in danger. Last 2 days, they fended off the lows. 8.6, I'm rounding. You can look it up, whatever it is, 8.67 and 8.65. And that was the base back in August, middle of August, 19th to be exact. The low was 8.68. Clearly, they care about it, which tells you that if they lose it, they're going to throw a fit. The bears will overwhelm the bulls to a degree, and there's a trapdoor that opens. How far down? Well, the first spot they stop is at 8. So 60 cents doesn't sound like a big deal, but on a base of 8.6 or $9, 8.6, the point from which it loses, it's a lot. Okay, so first things first, don't lose it. Okay, if you don't lose it, now you can tackle this lower high. So now we have a wedge of sorts. Lower high coming to a sharp point. There's no more room to go. So what is this? Oh, that's the S&P. So you've got the bears are beating up on the bulls, but the bulls are doing their best to hold the floor. Well, they come to a point, so now they have to do this or just let go. And the levels in these two cases, let's go over the levels. The first problem would be 10.5. If I'm long and 10.5 gets me out of trouble, I would lighten up a lot, if not get out completely. If I'm short-term long, if I bought it to try to swing it up, it's going to find a lot of sellers there. Okay, so the best thing to do is when the bulls get there, just to boom, do one of these, which I hate, but that's your only way out. And then 15, anything above 14 is a miracle. So if 14 gets me a lot of profits or gets me back to even, I get out. I'm just giving you places where I get out. 10.5, 10.6 is 1, 12, 14, and anything above 14. 15 and a half, 15.3 is the mathematical busiest place because of this, because of that. So expect a lot of sellers lurking up there. Not me saying it, this is actual fact. That line I did not draw. It's that volume bar. So all these volumes, most of them are here. So once it gets there, there's going to be a lot of people interested in buying and selling it. It's resistance. Okay? So I just gave you the upside. The downside is you have to hold the lows, otherwise you trigger the machines. Oh, there we go. Let's chase it. And momentum sellers will step in. The first hope, like I said, is 8. And then, of course, this one at 7 and change, whatever this one is that they held with 2 attempts. These should be floors that are decent, not floors, decent places where they could catch their breath. Otherwise, I don't know how low it goes. I'm pointing down here because I literally don't know how low it goes. Let me look back. So it did come from down there. So why not go back there? So I'm not calling it to go back there. I'm just saying I don't know how low it goes once they lose the current floor. I know they have a spot at 8, buyers. They have a spot at 7, buyers. And then they have a gap all the way to 6. Round numbers, I didn't make them up. And then 4. So those are the lines on the lower end. You don't want to discuss them, that's fine, they're there. I gave you the upside potential. So wedge, lower highs, trying to hold a floor. The wedge is 2 months old, 3 months old. This month, and this month. Lower highs is okay. Stop making lower lows. So the bottom is a process. First step is stop making lower lows. They're trying. Second step is start building upside momentum. Okay to make lower highs where you meet into a point and break out, and then you start making higher lows and higher highs to make the trend back up here. I also gave you where I would get out. This would be the first place, 10.6, 12, 14, and above, most definitely 15.3. Again, these are trading comments, not investment. So if somebody loves the company, okay, so first thing I said for Hyliion, for example, once it lost 18, I said I wouldn't average down. And this goes here too. Okay, they do have a P&L. I think they already sell trucks, but not a lot. All the hopes in the stock price were on future prospects, correct? You can correct me on that in the notes. Just keep it clean. So when the stock is speculative, by definition, this is speculative, then I must not increase my level of risk. Yes, home runs are beautiful, but unlike you, if you've been trading only a year and a half or 2 years, you haven't seen normal price action. We've had trillions of dollars artificially propping up the economy, so you don't know what it's like when the markets are operating normally. So home runs like overnight are rare. Now they're like every day. Just, I bet you can look up now, there's something up 40-50%, and not micro cap, just regular small caps, which shouldn't happen that often. Anyway, back to the point. I can be optimistic the stock. I can hold it and see if it does well over time. But I shouldn't personally. I'm not advising anybody to do anything. But what I wouldn't do is what I would not add to my risk. I would pick a dollar amount I want to risk on the stock. If it's speculative, and this one is by definition, it's not an insult, then I wouldn't add to it. Now, I can almost guarantee you in the notes section, they're going to tell me, do your due diligence. No, I ask you to do diligence and take your position. I'm offering my help with the charts as to where the machines are going to do what while you wait. I don't need to do the diligence on the actual company because I kind of have an idea what it does, and I believe in the charts more than the sentiment currently. All right, that's it. Hopefully it moves up from here. I want nothing but the best for it. I think the world would be better if we do all batteries, but all electric, but we're going to have to figure out something with the batteries. It's a limitation overall, the EV concept. Now, these guys might have a trick or two. I don't know if they're hydrogen even. Anyway, part of your homework on the fundamentals. I think last time I looked at them, sustainable solutions, commercial. Okay, so battery electric vehicle. Okay, never mind. So yeah, batteries are a problem. I think we make 90 million vehicles a year globally. Where the hell are we going to get all these batteries? How are we going to recycle all these batteries to sustain all of them being electric in the future? So the concept of having all electric in the future, I can almost guarantee you it's not going to be all electric. It has to be a hybrid of sorts. We can't sustain it. I don't think we have enough battery technology, production, and dealing with the garbage that comes out of the batteries to make that happen. Sidebar conversation.